With the dividend announced and $1.1 billion in immediate cash, this could be the start of something to come. MPT announced after Friday's close the sale of their majority interest in 5 Utah hospitals. They say a fund purchased an approximate 75% interest for $886 million, fully validating MPT's underwritten lease base of approximately $1.2 billion. I think it's worth looking back at 2023's third quarter's earnings call, where the CEO Ed Aldag says, "We may elect to access liquidity through prudently underwritten temporarily unlimited secured financing instead of permanently relinquishing value by selling assets into a higher rate environment." And even in such an environment, when the estimated current values of some of our hospitals are compared to our initial investment values, we are encouraged by the marketability for the sale of those assets. And in retaining the approximate 25% interest in the joint venture, this is exactly what they've done. In as far as this relates, they go on to say, simultaneous with the closing of this sale transaction, the venture placed new, non-recourse, secured financing, provided $190 million of additional cash to MPT, based on its share of the proceeds and further confirming underwritten asset values. This has been a major source of liquidity for the company. They say, together with the two transactions, delivered approximately $1.1 billion of immediate cash proceeds to MPT. In my last video, I showed that S&P Global downgraded MPT in part due to liquidity concerns. But after this massive cash inflow, maybe, just maybe, MPT could get a ratings upgrade after paying off debt. They go on to say exactly this. The proceeds are expected to be used to reduce outstanding debt, including payment in full of the approximate 300 million Australian term loan due 2024, and the repayment of borrowings under its revolving credit facility. Moody's says that a factor which could lead to a ratings upgrade is executing growth and diversification, while also demonstrating access to the public capital markets, which in part is exactly what they are doing. In relation to the so-called capital allocation strategy, Ed Aldag says, MPT's approach to underwriting hospital real estate has once again been validated by highly sophisticated third-party participants in a broadening private market for real hospital assets. Our primary focus remains on accelerating our capital allocation strategy, and we are now confident that we will exceed our initial target of $2 billion in liquidity transactions in 2024. Based on the valuations achieved on recent transactions and the terms we are actively negotiating for additional transactions, as compared to the prime hospitals I covered recently, it's clear that these Utah hospitals are in another league of quality, which makes sense considering the price tag. MPT go on to remind us of a few details. As previously reported, the Utah lessee may acquire the leased real estate at a price equal to the greater of fair market value and the approximate $1.2 billion lease base at the 5th and 10th anniversary of the 2023 master lease commencement. MPT granted certain limited and conditional preferences to the fund, based on the possible exercise price of the lessee's purchase option. I'd imagine the specific terms will be released in the next 10Q. Leave your thoughts in the comments.